While the small cap index crawled to a measly 4% return, my systematic portfolio absolutely crushed it with 40% gains in just one quarter. And here's the crazy part, it only took me 5 hours of work during earnings season to achieve this. Two stocks in this portfolio went up over 100% each. Another one of them, a 95% return in 3 months. Today, I'm revealing the exact system that has 40xed my portfolio over the last 6 years. If you are tired of mediocre returns and watching your money grow slower than inflation, this video will change everything. I'm about to show you a systematic approach that requires just 20 hours of work per year. That is less time than most people spend binge watching Netflix in a weekend. This strategy is based on William O'Neill's proven principles, but I have refined it over a decade of real world testing. By the end of this video, you'll understand exactly how to identify stocks at major inflection points before they explode. We'll cover the 5 step filtering system, the earnings breakout method that spots companies posting their highest ever profits, and why technical momentum is your secret weapon. Stick around because I'm sharing the exact buy zones and position management rules that made this system possible. Let me show you exactly what happened in Q4 FY25. 9 stocks made it into the portfolio with equal 11.11% allocation each. Here is where it gets interesting. 3 stocks absolutely dominated: Indochem, ASM Technologies, and Krishana Foskam, all up over 90%. These three alone generated 85% of the total returns. Only one stock disappointed us, and that was Killich Drugs. But here is what most investors miss: it's not about being right all the time, it's about being massively right when you're right. The portfolio gained 40% while the small cap index managed just 4%. That is not luck, that is systematic execution. And I'm about to show you exactly how this system works. Everything starts with one simple truth: the best performing stocks are companies posting explosive earnings growth. But here's where most people get it wrong. They look at any earnings growth. I only want companies at major inflection points. I use what I call the earnings breakout method. I'm hunting for companies posting their highest ever operating profit in a quarter. Not just good growth, but the best quarter in their recent history. To know how I do this, watch this video next. But I take it one step further. I calculate the degree of earnings breakout, and here is how it works. If a company posts 10 crores in operating earnings and their previous high was 6 crores in the last 12 quarters, that's a 66% increase from their peak. This filters out the pretenders and finds the real breakout stories. Now, there's one exception: seasonal businesses. For these, I adjust the comparison to the same quarter in previous years. This prevents false signals from companies that naturally have cyclical patterns. Earnings alone aren't enough. You need the market to recognize and reward that growth. And that is where technical analysis becomes your best friend. I use a simple but powerful filter, the relative strength rank from MarketSmith India. I only consider stocks with RS of 80 or above. This means the stocks must be in the top 20% of the market performers. Think about it: if a company has amazing earnings, but the stock isn't moving, what does that tell you? The market doesn't believe the story. I want stocks where both the fundamentals and market momentum align. This is where most fundamental analysts go wrong. They find great companies but ignore price action. Price action tells you what smart money is really doing. Here is a filter that separates the winner from the wannabes. How did the stock react on the earnings day? If a stock posts great numbers but falls 5% on the results day, the market is telling you something. Maybe the guidance was weak, maybe there are hidden concerns, or maybe the growth isn't sustainable. I want to see stocks that pop on earnings day. This confirms that the market is excited about the story. But there's one important exception. Sometimes a stock runs up significantly before earnings. This often means insiders or informed investors are positioning early. Take Krishana Foskam for example. It had already moved 71% in 3 months before earnings. When it posted 115% operating profit growth, it was available at my buy zone of 300 rupees. It hit 585, a 95% return in 3 months. The key insight: this happened when small caps were getting hammered market wide. The stock was defying gravity, which told me something big was brewing. Having a gray system means nothing if you can't execute it properly. Here is how I manage positions. Equal allocation across all qualifying stocks, 11.11% each in this case. This prevents any single position from destroying portfolio while allowing winners to drive returns. I establish clear buy zones for each stock based on technical levels. If the stock doesn't reach my buy zone, I don't chase it. Patience is crucial. Risk management is simple but non negotiable. I have predetermined exit rules for both profits and losses. The goal isn't to be perfect, it's to let the winners run while cutting losers quickly. Remember, this system only requires about 5 hours of work per earning season. That is 20 hours of work per year to potentially generate life changing returns. Let me recap the 5 step system that generated 40% returns in 1 quarter. First, filter for companies posting their highest ever operating profit. Second, calculate the degree of earnings breakout to find the most explosive stories. Third, ensure technical momentum with RS rank above 80. Fourth, confirm market excitement through earnings day reaction. Fifth, execute with proper position sizing and buy zones. This isn't 1 quarter wonder. This systematic approach has 40x my portfolio over 6 years because it is based on timeless principles. Find companies with explosive earnings growth at the exact moment the market recognizes their potential. The beauty of this system is its simplicity. No complex analysis, no decision paralysis, just clear rules and disciplined execution. If you want to learn more about this systematic approach, make sure you hit that subscribe button and ring the notification bell. I'll be sharing more details about the earnings breakout method, specific screening criteria, and position management rules in upcoming videos. And if you found this valuable, check out my detailed video on earnings breakout method. The link is in the description. The video dives deeper into technical aspects of identifying inflection points. Thanks for watching, and remember, systematic investing isn't about being lucky, it's about being prepared when opportunity meets preparation. I'll see you in the next video.